the EU or not is now in its final stretch, and globally all eyes, as well as those of the financial markets, will be in the outcome of next week's UK opinion polls. Well, they've swung backward and forward, but seem to suggest that the result will be very, very close. Now, as always, on a Friday, Professor Raymond Parsons is with us. Very good morning to you, Professor. Nice to have you with us again.
Good morning, Eben.
Before we talk about Brexit, let's talk about the latest balance of payments figures for the first quarter of 2016.
Well, look, I think you quite rightly said they are volatile. We mustn't read too much into one quarter's figures of the balance of payments, but there are one or two underlying messages that we should take note of. That is quite clear from the numbers that, for example, although we've had a weaker rand, our exports have not responded as they should, as one would expect. If you followed sort of textbook theory about what a weaker rand should be able to do for your exports. I think it's also clear that we are investing much more abroad than we are attracting foreign investment. And all this, of course, one can say does bear on what the credit rating agencies have been saying, the various boxes they've ticked. So, I mean, all the balance of payments is doing is simply, in a way, reflecting some of those concerns, and we will have to address those concerns in the months ahead.
The April retail figures on the back of this, good or bad news? How do you view it?
Well, I think they're not unexpected. We have a sluggish economy, and what the retail sales are saying is, look, that out there the consumer is not spending, is not able to spend as he or she has been able to do before. And we know what the reasons are. It's partly inflation. It's partly that many consumers are heavily in debt and do not wish to incur any more debt, especially with the rising interest rates. And then finally, of course, unemployment is also an impact on consumer spending and on retail sales. So I think it's consistent with our current reading of the South African economy.
Yeah, there's a little bit less to spend, and we all need to live with a little bit less. Isn't that so, Professor?
We have to do more with less.
There we go. I like that. But now the big overarching issue, I think everyone with a little bit of money invested anywhere in the world is having a look at Brexit right now. What is your expectation for next week? It seems as if it's going to be very close.
Well, it looks like it's going to be very close. The arguments have gone, forward and backward, and the opinion polls have gone also backwards and forwards, as you have indicated. I think the point of departure must be, of course, at the end of the day, it is for the British voter to take their decision. But quite clearly there are much wider effects, because Britain is the fifth largest economy in the world, and if it chooses to opt out of the common market, that will have important consequences for the British economy itself, and also for the common market, and also for South Africa, because we have an important stake both in the British economy and in the common market. So whatever decision is taken next week will have wide effects on the global economy, and quite clearly the message broadly from the global economy is, we hope you will stay in the family of the common market and not have a messy divorce.
Well, it seems as if Boris and his followers have something totally different lined up for us. But I want to narrow it down and bring it back to South Africa. I'm sure that our governor, we see on screen there, must be a little bit concerned with what could happen with the South African economy if Brexit went ahead.
I think the big point is that because this is a very unusual development, it does generate a huge amount of uncertainty for countries like South Africa. We're into uncharted waters. Now, if the decision next week is that Britain wants to leave the EU, it has a 2-year period designated in terms of the EU treaty where it has to negotiate its exit. And it must do it within 2 years. There are certain penalties that also incur if you don't. That gives South Africa an opportunity, and other countries, but we're talking about South Africa. We then have to draw up some contingency plans. We've got to say, well, what has to be renegotiated with the EU or with Britain from a trade point of view, from the point of view of our interests? How are our economic interests affected by this very dramatic development in Britain and in the EU.
Yeah.
And we've done some research at Northwest, which we have released today, just to say to South Africans, look, I know we've been preoccupied with a lot of other important domestic things, but we better keep an eye on what happens next week. Because if the outcome is negative, it could, in a worst case scenario, shave almost 0.1% off our own growth rate. That has certain implications, especially if this year we're only expecting a growth rate of almost 0, and perhaps next year, or perhaps 1.3. So for us, it's very important that we assess what the decision is next week, and certainly from South Africa's point of view, we would prefer Britain to stay in the common market rather than to exit it.
I want you to look at to tell us what you're seeing, the arguments for and against it. It seems as if the arguments for an exit has gained a little bit of momentum in the last couple of weeks and months.
Well, speaking as an economist, I would certainly say I think that the economic arguments are much stronger on the side of those who want to remain than those who want to exit. But I don't think that is really where you will find the swing factors. I think the swing factors for the exit constituency really revolve around the sovereignty arguments, the political arguments. Does Brussels, which is the headquarters of the common market, have too much power, too much say over other economies? And secondly, the migration issue. I think these are the two important issues. These are the two swing factors. Now, of course, the British Prime Minister has sought to negotiate certain special relationships for Britain in respect of those issues. So the package he's putting it's an amended package for their future membership of the EEC. But whether it will prevail, well, we'll see next week what the British electorate decide their economic future ought to be.
This is such a massive risk, and something that 10 years ago one would never even contemplated. How did the UK get to this point, you think?
Well, I think you must recall that in 1975, when they joined the common market, they also had a referendum, and they got a 2/3 majority. But there's always been a residual unhappiness among many of the British nation about being part of the common market. And I think some of the decisions since then have led to a lot of criticism. I'm also coming back to the issue of sovereignty and the issue of the more recent issue of this migration problem, which I don't think has been well handled by the EC. In fact, that the anthem for the common market is Ode to Joy. And I think many people would say, well, it's not an ode to joy, there are problems. And I think it's the problems that have emerged since 1975, which have really triggered off this big debate. Does Britain still want to be part of the common market future or not? And the important point on the table now is whether the concessions which the current British government has negotiated to amend its position in the common market, will that be enough to assuage the electorate that these problem areas about sovereignty and about migration can still be dealt with within the framework of the common market? So the real question for the British electorate is that they face next week.
Sounds a little bit like a marriage that's gone sour, Professor. But I wanted to ask you about your final thoughts for this week.
Well, I think we must just keep a very careful eye on what happens in the United Kingdom next week. I think it's important for us, if they decide to leave, we will have to do our homework to see if we can soften the impact and manage the uncertainty over the next year or two that will arise. So all I can say to your viewers is watch the space.
It's going to be a very interesting week. Professor, thank you for joining us and sharing your thoughts on, the economy, really, this week. And it's something that we've got to keep an eye on, says Professor. Thank you for joining us, as always, Professor Raymond Parsons from the Northwest University. Time for us to take a break. Don't forget, of course, we're dealing with issues of Father's Day this weekend. Happy Father's Day, we should say in advance. But we ask you the question today, what do men want? Men want to watch rugby, some people tell me. It's not really as simple as that. after a short break.